So interest rates just keep going up and up and up and further deteriorating the real estate inventory and the real estate sales. This is the San Diego real estate market update for October. So here we go. All right, so as I had mentioned earlier, interest rates are crazy high. We're around 7.31% for a 30-year fixed rate mortgage as of September 28th. Compared to that same time last month, we were at 7.18%, and compared to that same time last year, we were at 6.7%. So you can see that increase, and unfortunately, since we just had a higher inflation number than expected, interest rates for the foreseeable future are looking to increase even a little bit higher, probably closer to 8%. Hopefully, at the end of the year, it'll start coming down, but unfortunately, that's not the case as of the near future. So inventory actually decreased, again, because interest rates are so low, so people don't want to get rid of their 2, 3, or 4% mortgages. So people are not listing their properties for sale because they don't want to get rid of that low mortgage, and who would? Compared to the same time last year, we only had a 1.10% drop, and we're roughly about 56% less inventory than we had last year, and last year was already very low. So sales also decreased. Also, buyers are finding it hard to pay 7.5% for a mortgage. So naturally, sales are also depressed, about 1,074 in September, or 11% less than we had last month. Compared to the same time last year, we had a 20% drop. This was when the interest rates started increasing. So people had that fear that prices were going to just crash, but obviously that was not the case. And we are about 15% less in sales than we had last year. And prior year, we had, I think, about 25% less sales. So you can see how these interest rates are definitely compressing the market. Prices remained steady around $565 a square foot, or roughly about $995,000 for a medium-priced home in San Diego County. And compared to that same time last year, there was only a 1.5% drop in home prices, about to $521 a square foot. That's roughly about 8.5% less in price than we have as of last month. Market time actually increased just a little bit, about 1 day to 10 days for the median days on the market. Compared to the same time last year, there's a 27% increase to 19 days on the market. That's roughly 47% more market time than we have right now. So still relatively hot. If you price your property well, it's gonna definitely sell. As far as the list to sales price ratio go, we're at 100%. So if you put, again, the property on the market at a reasonable price, you're most likely going to get 100% of what you're asking for. Compared at the same time last year, we're at 97%. Now the lowest that I've seen it is around 95%. So at 97%, buyers do have more of an advantage than the sellers. Luxury sales decreased about 14% to 121 sales. Compared to last year, we had a 10% drop. Luxury inventory also saw a drop about 10%, or 16.5% from last year. Again, these higher prices are going to get hit the most because obviously they're harder barriers to entry. Since the interest rates are higher, it's harder to qualify for a higher priced mortgage. Again, thank you very much for watching the real estate market updates. If you want to track your home's value, go to www.mysandiegovalue.com. If you want to connect with us, don't forget to follow the QR code or follow us on social media. Again, thank you very much for watching, and we will see you next month.